So if you would have put $1 in Amazon in 2008, right now the value would have been $62. Similarly, if you would have put 500 rupees in Hindustan Unilever in 2008, then that money would be around 2500 as of today. Now, all of us understand that Amazon was a great company in 2008. It is a great company even today. Similarly, Hindustan Unilever was a great company in 2008. Even today, it is a great company and ho sakta hai future mein bhi ho. So, the simple roadmap to generating wealth in equity seems to be that you buy and hold really good companies. But genuinely tell me and honestly tell me that are you able to buy and hold a company for a substantial period? The short answer would be a no, because most of us retail investors, what we typically do is that 25-30% profit whenever we make, we cut our position and move on to a new stock. So on this video, I am going to help you do two things. One is that I will share a framework, and if you apply that framework, you will have a very clear understanding that what type of stocks should you buy and hold and up to what point. Okay, so that is one fundamental point that you will learn from this video. Second, I am going to take you through my list of buy and hold type of stocks that I am currently holding. Obviously, इसका meaning क्या होता है that we will discuss subsequently on the video. But please watch this video till the very end. Also, a very humble request that please like and comment on these type of videos so that it reaches out to more people. Just a simple like from your side will make people more fundamentally aware. A lot of work goes into creating these type of videos, so support from your side would mean a lot. Also, I would like to introduce you to the sponsors of today's video, which is Vested. It is an excellent platform for investing in the US market. I personally use this platform to make my US based investments. Now, why do I invest in the US stocks? Well, the reason is simple, that there are many buy and hold type of companies in the US, and I will take you through the list also. That actually gives you diversification benefits, and there are other hosts of benefit in terms of portfolio construction. So definitely, if you're investing in the US market, consider checking Vested. I have put my link in the description, so please check it out. Okay, so let us understand the buy and hold framework, and this consists of 8 parts. Okay, now this is a framework that I have developed by investing a lot of my own money. Please note the word that this is buy and hold. This is not buy and forget. Buy and forget, I do not believe in. I think that if you're investing your money in equities, you need to continue educating yourself about the equity market. तभी आपका return बनेगा. Otherwise, you are just simply buying and forgetting. आपको पता भी नहीं चलेगा what is happening with the company, right? So this is not buy and forget. This is buy and hold. Okay. So let me take you through 8 simple steps along these lines. So the first key step and a very commonsensical step is that whichever stock you are picking, let's say if you are picking Hindustan Unilever, then the growth of the industry. Example, HUL is in FMCG, right? FMCG market in India. Now, the growth of that industry should be at least higher than the inflation rate in India. For example, if you pick certain industries, example could be sugar industry. Now, the growth rate of the sugar consumption, if it is, let's say 4% and inflation in the economy is 6%, then does it make sense to buy these stocks in sugar industry? The short answer is no. So, the first important step to this entire framework is very simple, that pick an industry which is growing higher than the rate of inflation. This is critical. For example, these would be industries like FMCG, IT. At certain point in time, other industries like real estate grows much faster than inflation. So all these industries could be considered. So this is step 1. Step 2 should be that the industry should have a very high barrier to entry. Now here, let's quickly discuss the case study of Apple. Now what is the barrier to entry for Akshat to start a company that can compete with Apple? Now Apple is an electronics company. Akshat can also start an electronics company. Ho gaya. Right? So there is no barrier to entry. No, you are studying the industry wrong. Apple is not like an electronics good or electronics product. Its industry is luxury electronics / brand. जो लोग Apple के product खरीदते हैं, many of them would not even understand the specs around that Apple product that they are buying. They are buying Apple products because of the brand or the luxury appeal of that entire product, rather than going after कि अच्छा उसमें 8GB RAM है, 16GB RAM है, this that, right? So they are not bothered about that. This is a brand and this has massive barrier to entry. I cannot come tomorrow and create a brand like Apple. It's almost impossible for me to create such a brand. Even if you take a notch up and think कि अच्छा Elon Musk can create some brand like Apple, very tough for him to do. He might not be able to do that in the electronics industry per se. Now the third point is that the stock that you're picking, it should meet the Porter's 5 forces criteria, because businesses are dynamic. Apple is a great brand today, HUL is a great brand or a series of brands today, but it's not as if that it will forever stay that way, right? Because businesses change, people preferences change, 100 different changes can come. So you have to monitor it. How do you monitor it? So you need to apply this framework, okay? So this is what Porter says, and this is a widely taught framework in business schools, that usme ye dekh lo, whichever company you are picking, that can new entry happen in that particular industry. What is the buyer power? For example, in Apple products, what is the buyer's power? For example, you and me, can we go and tell like Tim Cook ki bhai sab, very expensive phones, give us a discount of like 30% only, then we will buy it? No. In Dubai, this is happening, that people are running like crazy to buy iPhones. So buyers have literally zero power here. Now what about suppliers? People who are giving raw material to Apple to make their next iPhone, do they have any power? They will say that, you know what, पहले हमें सारा पैसा चाहिए, we want all the money first, then only we'll supply to you. No, nothing like that. They have no power there. Threat of substitution, that okay, will people stop using iPhones? Yes, this is a very real threat, and you should monitor whatever is happening with the Apple products. If you're an Apple stockholder, you should definitely keep checking this aspect of the game, right? There are minor points. Please go and read it. You will understand this more. In case you're more interested in learning about the stock market from a macroeconomics point of view, from a framework driven point of view. So I teach all this in a live crash course. The October batch is completely full. You can check my links in the description and comment box. We are launching a new batch for January. So that is where we will do the next live batch. So you can check more information about this course in the description and comment box. The good thing about the course is that if you know absolutely nothing about the stock market, everything will be taught fundamentally to you. I will be the lead teacher. I will teach you everything in a step-by-step format. You will have a lot of clarity around how to analyze businesses, how to apply frameworks, how to use macroeconomic style of investing, which you can do along with your full-time job. And on top of that, once the course is completed, you will be put on a community, an investment community. We already have close to 35,000 members there. So you'll join that community, you will learn from each other. So that is the USP of the course. So definitely go and check it out. Okay, so then comes the fourth point, that any company that you're picking, it should be in a space where regulations are predictable. Now, I'm not saying that that industry should be less regulated or more regulated, but at least clarity in regulation should be there. A classic case in point is whatever is happening with the gaming companies in India. Those are definitely not buy and hold type of stocks. Usme kuch bhi ho sakta hai. Now, if you are going in with the perspective that I will buy company X and I will continue to hold this for a substantial future, then you need to pick companies that are predictable in terms of regulations. You can't go and buy gaming companies. Now, please note that I am not trying to criticize gaming companies. I have personally invested my money in gaming companies. Why? Because the intent of investing there is different. Those are not buy and hold type of stocks for me. I am just playing a theme around as of now. I might very well cut my positions depending on technicals, depending on a lot of other things. Here on this video, we are speaking about buy and hold type of companies. Then comes the fifth point, that any company that you pick should have vertical and horizontal extension opportunities. Now, what is the meaning of vertical and horizontal extension? So, पहले समझते हैं horizontal extension. So, let's pick the case study of Hindustan Unilever. Now, if it is making a shampoo for females, it starts making shampoos for kids, it starts making shampoos for men, it starts making shampoos for dogs. So this is a horizontal extension. What is the meaning of vertical extension? So let's say that it's making shampoo. Vertical extension would mean that it starts entering into other type of products also. For example, it could be hair serum, it could be conditioner, it could be a bunch of other hair products or makeup products, all that stuff. So this is called as horizontal and this is called as vertical extension. Now think about it, that let's assume that you only buy HUL driven brands. Now they have existing, let's say 1 crore customers. Now if they launch a new product, then at least 10-20 lakh people are going to buy that new product. No. So that is the advantage of having built a brand, especially in an industry where horizontal extension or vertical extension of product is easier. Then comes the sixth point, ki acha, it should be like professionally managed. Koi scams nahi hone chahiye, leadership, all that stuff. Very important point. Seventh related point here is that the profits should be passed on to the shareholders. Now this is a very important point that people miss. People just assume that we have bought a profitable company, revenues, profits, growth, this, that. But see, you are a shareholder in a company. You should be considerate of the fact that if the company is making money, is it passing that wealth to you in some form, be it in the form of dividend, be it in the form of stock price rise? The पीछे से इतनी घपलेबाजी होती है that this point that I'm going to explain, this is very rarely understood. So let me pick an example. So let's pick the example of IRCTC, right? Now, if you go and check investor holding, what you will see is that promoter holding is 62, but who is the promoter here? So that's the President of India. अब वो तो trading करेंगे नहीं, right? They are not going to buy, sell shares and be worried about कि अच्छा IRCTC is growing or not growing. So here the promoter is not really bothered about the growth of the company. Now, I am not saying this in the bad spirit with the President of India. The point I am trying to drive home is that President of India is not like a stock market player, right? He might have other more important things to do. So for him, IRCTC is not a business where he is too much concerned about growing shareholders' wealth to begin with. Now comes second type of businesses which are family owned. For example, bhai, mama, bhanje, bhatije, beti, beta, everyone is there, right? Now, if the company is growing rich, they might buy like Mercedes from company's money. They might buy like 50 villas from company's money. They might do 100 different things with company's money. Now, in that respect, what happens is that this fixed asset that you're seeing on the balance sheet, जो मर्सिडीज खरीदी जा रही हैं, जो विलास खरीदे जा रहे हैं, एयरप्लेन्स खरीदे जा रहे हैं, who is using them? Well, the company management, भाई भांदे भतीजे and all that. And where is it getting reflected? It is getting reflected in this fixed asset column. Okay, so now you can argue कि यार अच्छा, you know what, the corporate governance should be there, this, that. But I hope you got the basic picture. Now this, I can create a video in itself, explain it to you in massive detail, but I hope you got the intent here. So then comes the final point about buy and hold, that the company that you're picking, it should have positive tailwinds and negative headwinds in the industry. Now, what does that mean? For example, let me ask you 2-3 basic questions. That when it comes to conventional automobiles, petrol, diesel gaadiyan, do you see like a very bright future for them in the future? The short answer is no. So if you are buying a company like Maruti right now with the aim of buying and holding it, it's tough. You might make like short-term money, but you can't say, like, I mean, sensibly you can't say that अच्छा अभी मैंने खरीदी है मारुति, it will definitely become like an EV player in the future and do all good things. Might not happen. Who knows, that Ola Electric might beat Maruti in that new game that is being designed in this industry. Same goes for the health product oriented industries. For example, these days शक्कर खाने से everyone understand that it is not good for your health. As people understand this point more and more, what is going to happen to established player, even something like HUL, which sells a lot of stuff, Nestle, which sells a lot of stuff. So you need to be considerate about these trends and study these trends more holistically if you have to factor that into your buy and hold. I'm not saying that HUL, Nestle is a bad stock for the next 2 years. These are mega trends. It will take time to change. But yes, you have to be considerate about these mega trends because this will disrupt established stocks quite considerably. Okay, so with that said, let us move to specific stocks that are buy and hold for me. Here, I do not worry about 5% fall or 5% rise or 10% fall, 15% fall. No. Here I am holding it for at least with a 3-4 year viewpoint where I am expecting the share price to double from this point. That is the intent with which I am buying these stocks. First stock that I have in my portfolio is SBI Cards. Now, why do I consider it to be a buy and forget? Now, framework लगा के देख लेना, majority of these criteria will meet, but let me highlight some significant points. Now, the first key thing about the stock is that there is massive tailwind to the industry. Now, credit cards, do you see that this trend is getting stronger or weaker? Like 5 years from now. Now, according to me, India is a deeply under-penetrated credit card market even as of today. It has a 30% plus growth rate right now. 30 भी मत मानो, 25 मान लो. What is inflation in the economy? Maybe like 6-7%, right? So it's like 4x, 5x time growth of the entire industry that is happening. And SBI Cards is one of the leading players in that industry. Now you might give me an opposing view कि अच्छा बहुत सारे players आ गए हैं, co-branded cards हो रहे हैं, this that. See guys, the point is that it is growing 4 or 5 times inflation, right? Or 4 or 5 times the growth rate of the economy, so to say. Now, if that is happening, it's in a growing industry. The size of the industry will become this much. Now, even if the market share of SBI cards go down, it's not as if that the company will vanish or company के साथ बहुत बुरा हो जाएगा वाली चीज, right? Yes, our estimates might go wrong. That I am expecting the stock price to, let's say, 4x, 5x from this point in the next 5-6 years. Instead of 5x, it will be 2x. तो भाई आपके 5 साल में 100% gain भी हो गया. So what is the problem with that? So that is the perspective with which I am looking at SBI cards from an industry growth point of view. Now, additional trends that are supporting. So one is that credit card is an aspirational kind of a thing. If you would be going to airports right now, आजकल segregation हो गया है airports पे, right? If you have HDFC Infinia or like some big credit card, then you will go to like Premium Lounge. If you have like Fuddu credit card, then you will go to some like Bekar Lounge. Now this segregation is happening. Why? Because all the banks / credit card companies want you to spend more money via credit cards. उसके ऊपर cashbacks, UPI linkages, all these are trends. अभी तो ये trend होने शुरू हुए हैं, right? Give it 5 more years. This is the rise of consumeristic culture in India. Do I support it? Absolutely not. But I'm not blind. I will at least invest my money and make profits out of it. So that is how I see it as an investor. Now let me very quickly take you through the fundamentals of SBI cards very quickly, right? So see, it IPO'd at 724. Right now it is somewhat at that same level. There is at least a 30-40% quick upside left on the stock, which should happen. Now I cannot write it on a stamp paper and give you 6 महीने में होगा, 12 महीने में होगा, all that stuff. But it is likely to give very good returns whenever the stock runs up. So I at least see this stock doubling from this point. On top of that, if you take a look at the revenue that the company is making or the profit growth, are the profits doubling? Well, it is 4xing in 5 years and it is compounding at a growth rate of at least 20-25%, which is very high growth rate. So under no circumstances, I feel that this is an overvalued stock. This is a good stock, even if you don't check it from a valuation perspective. At least for now, this is buy and hold. Now, final 2 things about the stock is that the trend of the stock is positive. It is not as if that it is losing market share quite aggressively. Nothing of that sort. Competition badhega because it's a highly profitable industry. A lot of players are going to enter it and will try to make their own money. But here is an important chart and it will show you the total spent amount of SBI cards, and you will see that this has more than doubled in the last 5 years. No problem there. Final point is regarding the regulation in this space. See guys, it's not very easy to launch a credit card company in India as of now. The regulations are mostly in a mature stage in this industry. It's not as if कि बहुत ज़्यादा regulations आएंगे. Of course, little bit of changes can happen here and there. Stock can fall by 15-20% anytime. That anyways can happen. But it's not as if that this industry needs to be heavily regulated from this point. Now मैं हमेशा finance stocks के बारे में बात करता रहता हूँ. So I will not speak about finance stocks. I will try to speak about them at last. So here I have 4 stocks in my portfolio. One is Microsoft, one is Amazon, one is Apple, one is Facebook / Meta. So these are 4 stocks that I'm holding. These are all very good, solid companies, and they are somewhat buy and hold for the exact same reason. And I will outline a couple of important theories here. So the first important point, let us quickly discuss Microsoft. Now, Microsoft is a company that is dominating every tech innovation that is happening. One example would be cloud, right? So this is Azure, which Microsoft is already prevalent in. Now there is OpenAI ChatGPT. You would have heard about it so many times. So Microsoft has its hands here also. They have their hands here also. They are an asset light company. If another innovation is happening in the industry, they can go the acquisition route. So what is meant by acquisition is, so let's say tomorrow some new technology comes, or let's say wearable एकदम से बहुत ज़्यादा प्रचलित हो गए, right? And people are investing a lot of money and buying products around wearables, and Microsoft is losing the race. They have massive amount of money in hand, which they have, and they will simply go and buy me if I have created a company in that space. That is called as acquisition strategy. That has not worked well for companies like Byju's, which are extremely cost heavy companies. These are asset light. When it comes to Microsoft, Amazon, Meta, all these companies are sitting on massive balance sheets. So from that perspective, these are solid companies to own. There is no problem with the business, at least for a substantial future. Now let's quickly talk about the tailwinds in the tech industry. Now there was a study that was done by McKinsey, and it says that by 2030, this much amount of value unlocking will be done. Now value unlocking का मतलब क्या होता है? Value unlocking simply means that, think about it this way, that in India, hypothetically speaking, let's say there are 1 crore credit card user, and by 2030, it is expected, looking at the growth rate, that there will be 20 crores credit card user. So how much value can be unlocked from that? That gives you an estimate in INR or US dollar terms. So this is the total amount of new money that will be generated in tech. Now, who do you think is going to capture this money? According to me, it will be the top 4 companies. Now we can sit and discuss all day कि नहीं यार TCS कर लेगी, Infosys कर लेगी, bunch of Indian companies are going to do it. Maybe, maybe not, I don't know. But I do feel that with Meta, consider that they can show their product roughly to half the population of world because they have direct access to them. इतने सारे लोग WhatsApp use करते हैं, Facebook use करते हैं, वगैरह वगैरह. So the cloud or their ability to reach all these people is massive, and technology में adoption is the main lever of growth. Any new tech that comes in, if Facebook / Meta wants to sell it, they can easily do it. They can get the word out very quickly just by using WhatsApp. They have massive advantage which cannot be replicated. So again, go back to the framework that I was explaining, that if you consider Meta, right? their reach is massive. You can't replicate that. Porter's 5 forces के हिसाब से you cannot challenge something like Meta in terms of its market reach. Short term में हो सकता है, right, 5-10%, 20% here there it falls because of valuation, this that. But the reach is just unparalleled. If you are keeping a 10-year viewpoint on the industry, कहीं नहीं जा रही from that point unless, of course, the regulation changes. So far, these companies have been heavily regulated. There are a lot of concerns, but honestly, these companies dodge regulation. And according to me, regulation is the only risk on these 4-5 stocks that I've just mentioned. Except for regulation, you just cannot compete with Amazon and all these different companies. Let me show you a very quick case study of Amazon. This is a stock that I'm adding more to my portfolio, and I will explain it to you in 2 minutes why it will make sense. Recently, Amazon has started to make a lot more money through ad revenues directly by showing those ads to retail customers. You yourself would have seen the sponsored link when you're going and trying to buy products from Amazon. Those are ad revenues for Amazon. Just until 1.5-2 years ago, no one thought that Amazon is going to start challenging companies like Google or Meta in terms of the ad revenues in the retail market. But they have been amping up their business and are taking the market share away from Google and Meta. Now see guys, I cannot tell you whether Amazon is going to win or Apple is going to win or this top tech company is going to win. They are going to compete with each other, but their cartel, that's very difficult to break from this point. Extremely difficult to do it because of the barriers to entry that these people have created. So I'm not over analyzing it. मैंने तो सब में डाल रखा है पैसा इन 4-5 कंपनियों में, right? At least 2-3 of them will continue to expand massively and compound massively from this point. Now many a times people say that, you know what, these companies are already very big, so उनका growth rate कैसे आएगा? Okay, so let me show you the case study of Amazon here. So here are the advertising services revenue, and you can check that they are growing at a 22% CAGR. And ये अपने आप में एक industry है, right? With the amount of money that they are making from this business line itself. I am not saying that Amazon will definitely double in like 2 years, 3 years, that I cannot take guarantee of. But from a consistent compounding point of view, they will easily be able to explore 15-20% growth opportunity every single year. Now again, apply that same framework to Apple stock, and I will just highlight it here rather than giving you commentary around it. Now again, this point number 2 and point number 5 from the framework are very relevant to Apple stock. So please check it more. अब मैं बहुत ज़्यादा commentary नहीं कर रहा, otherwise video will become very long. Now comes the natural question, okay, where will Apple's growth come from? That आपको पता है that even Uber taxi drivers in the US, they own Apple products. Why? लोन पे ले लेके खरीदेंगे भाई, लेकिन हम खरीदेंगे एप्पल ही खरीदेंगे एंड एप्पल 15 खरीदेंगे अभी तो जाके. पीपल हैव जस्ट सिंपली लॉस्ट इट. सो इन अमेरिका मार्केट इज सैचुरेटिंग. इट इज राइट नाउ द मोस्ट प्रॉफिटेबल मार्केट फॉर एप्पल. नाउ इंडिया इज अ डीपली अंडर पेनिट्रेटेड मार्केट फॉर एप्पल. नाउ विल से यार इंडिया में थोड़ी होता है, इंडिया में लोग आर सेंसिबल है, थोड़ी अमेरिकन की तरह दैट वील गो एंड बर्न आवर मनी दिस दैट. होने लग गया है. स्टूडेंट्स आर द फर्स्ट वन एंड गिव इट 5-10 मोर ईयर्स. 10 तो मैंने ज्यादा बोल दिया, गिव इट 5 more years and you will have people buying like crazy stuff that they can't afford on EMIs, loans, this, that, chasing every new gadget. That is where next layer of growth for an Apple-like company will come. Apple is likely to double from this point. Okay, so from FMCG segment, my 2 picks would be HUL and DMart. Now HUL I have already spoken quite a lot, so I will not speak too much about it. It is a consistent compounder. It goes at like 15-20% a year. It is likely to continue. So whenever you see it falling, you could consider aggregating. Now DMart's primary advantage is that it competes on cost and it is making that business more profitable. How exactly? Because it owns real estate, or whichever real estate it leases, it has leased it out for 20-30 years. So from 20-30 years, the company is not going anywhere. It has already been able to create a low cost operational model which will continue to compound at 20-25% CAGR बहुत easily, sensibly speaking. Now you and I cannot create another DMart very quickly because the cost of real estate itself has become so high that it's impossible to buy like real estate at sensible prices after 2020 in majority of the places where DMart stores are already in play. So this is the simple winning advantage for DMart. So next comes the segment from the healthcare, and here I have 3 stocks, which is Max Healthcare, Apollo and HDFC Life. Now I'm very bullish on the life insurance industry. In fact, मैंने HDFC Life have been making videos for a while now. I do feel that the stock is going to double. Why? Very simple. India is a deeply under-penetrated market when it comes to insurance. The cost of medical healthcare in India is going up. There is a tie-up between the hospitals and insurance company per se. For example, just to explain my own story, my dad has a kidney stone operation. The doctor first day asked कि अच्छा do you have insurance? And I'm like अच्छा क्या फर्क पड़ता है इससे? So he said that see if you have like insurance stay for 2 days, right? If you don't have insurance I'll make you stay only for 1 day. The point is that the doctors are on the side of caution बोल लो या कुछ भी बोल लो, right? So what they are going to do is that as people buy more and more insurance this will become a standard practice कि भाई kidney stone operation कराना you have to stay in the hospital for 2 days. वही बात है. So people by default will say कि अच्छा चलो ठीक है यार I'll have to take insurance only next time से, वरना तो बहुत महंगा पड़ रहा है. So that is the bottom line there. Now I feel that there is a lot of value to be unlocked in the entire HDFC universe, whether it is HDFC Bank, HDFC Life, HDFC AMC, all are solid long-term companies, buy and hold type of companies for me. I'm buying and holding. I'm not worried about like 10% fall here and there. Why? Think about it. Use brain. You can understand this entire story just by using couple of statistics here. Let's see. Before the merger of HDFC, which is the loan giving arm for houses of HDFC, and HDFC Bank, only 2% of HDFC Bank's customer used to take housing loan from HDFC Group. Now, do you think that it will only be 2%? No, उसमें time लगेगा. Yes, it might take like 2-3 quarters, 4 quarters, 5 quarters. But don't you think that this number will double, triple from this point? It can easily double, triple. So these are basic points that you need to keep in mind. I also wanted to discuss more about like Max Healthcare and Apollo and other finance stocks, but unfortunately I've run out of time. I'll try to make a video for my Hindi channel, so you can definitely go and check it out. But thank you so much for watching. I hope you enjoyed this video, this conversation, and hopefully it made you fundamentally more aware. You can go next and check out this particular video on how to construct a portfolio. Thank you so much for watching, and I'll see you soon.